We've had some pretty depressing housing numbers coming out. Does this mean this recovery we've all been hoping for is squelched?
Well, coming into the year, I don't think anyone thought that 2012 was going to be the year that housing suddenly started going gangbusters again and we got back to the peaks or anything like that. That being said, we have seen some soft data lately, pending home sales. Yesterday's Case-Shiller numbers, which are national home price measures, city by city, were disappointing and showed continued declines, which means we're still sort of bumping along the bottom here. There were signs for optimism towards the end of last year. We saw a big run up in the market, particularly in housing-focused names. At this point, it's hard to think that we're going to have that big rally in housing this year, but a little contribution from housing compared to the negatives that we've seen for the past 4 or 5 years would really be a big step in the right direction.
You mentioned the housing stocks and how they've appreciated and the run in the market. So does this mean it's time to get out of housing?
Well, I think the market may have gotten a little ahead of itself. You saw numbers recently from KB Home and Lennar. Both were not great, not disasters, but a little bit disappointing in some ways. KB Home had a narrower loss. Lennar's profit was down. What you're seeing now is the home builders who can bounce around in different markets and who can go where there's more of a housing demand and construct homes there, they're going to be in better shape. But not everybody can do that. It won't happen all at once. This is a slow slog of a recovery in housing, and it's not something that these stocks are going to have an unabated run higher. So after such a big charge, you saw the same in Home Depot and Lowe's of late. They're trading at much higher multiples than they were a few months ago. So it's going to be interesting to see whether this recovery in housing stocks has gotten too far ahead of itself. Earnings season that we're starting to get into now may give us some clues into that.
So it's not necessarily a run for an exits indicator.
I don't think it's that yet. If we start to get really awful reports, if the Home Depots and the Lowe's of the world and these retailers say that they're not seeing the kind of home improvement spending that you would expect to see at this period of the cycle, that may be an indicator. But I don't think we're there yet. Some kind of a pullback, most likely, but I don't know that we're in the bailout kind of mode yet for investors.